Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Black Friday, November 29th. I hope everyone had a wonderful Thanksgiving holiday. No futures trading overnight as markets took a break for the annual family feast. Early ideas and opening calls are mixed with very little fresh news. We do get our weekly export sales report later this morning. Demand is expected to remain seasonally strong as many importers load up on U.S. inventories, partly due over fears of higher import tariffs early next year from the incoming Trump administration. Bean oil sales have already reached the USDA forecast for the entire 24-25 marketing year and should remain stout as prices have fallen to a record discount to palm oil. In addition, we do get our monthly update from the EIA on the biofuel capacity, production, and feedstock usage data. That coming later this morning. Deliveries were largely as expected, 776 contracts against the meal, 111 for corn, and 105 for Kansas City wheat. As expected, there were no deliveries against Chicago wheat or bean oil, as there were none registered with the CME. A good mix of rain and sunshine for nearly all of South America is keeping production estimates elevated to our neighbors from the south. There are a few dry pockets in central Argentina, however, that will need moisture soon in order to keep conditions favorable, something so we'll watch here moving forward next week. Updates from the Buenos Aires Grain Exchange did place their soybean plantings at 44%, up 8% for the week. They kept their production forecast unchanged at 50.8 million metric tons versus the USDA estimate at 51. Corn plantings advanced only 2% to 41% complete as farmers have been focusing their efforts on getting the soybean crop planted. They did keep their production forecast for corn unchanged at 47 million metric tons, and that is well below the USDA estimate at 51, as their acreage forecast remains well below that of the U.S. They did place wheat harvest at 39%. AgriConsults, they came out with a very large production forecast for Brazil. They got beans at 172.2 million metric tons, above the USDA estimate at 169 and well above other private estimates from Brazil. Their corn production forecast at 132.7 million metric tons, also just above the USDA's 127. March corn did stabilize on Wednesday near its 100-day moving average at 427. I look for prices to remain pretty much range bound between 420 and 450 as demand remains solid, however, upside limited due to favorable weather in South America. Jan beans continue to chop around between $9.75 and $10. To me, the path of least resistance still seems to the downside. Longer term, I've got an objective of $9.35. Testing that level, that was a low from late summer. Disappointing trade on Wednesday in bean oil as prices fell back down to the lows for the week. I look for some recovery today as palm oil prices were up nearly 3% overnight in overseas trade, while beans they again slipped to a record level versus palm oil, the competitive vegetable oil. I do look for the USDA to significantly raise their export forecast in their December WASI report. But however, the upside would appear limited as the $1 per gallon blender's credit does hang in the balance here that expires here at the end of the year. I do look for meal prices to test their recent lows. Wheat prices, they just continue to hover near their lows here from earlier in the month, which are just above the contract lows from August. This despite elevated tensions in the Black Sea, largely due to big improvement with U.S. crops here in recent weeks with rains in the southern plains. So look for a mixed trade. I do look for higher trade in the bean oil versus the meal. And thank you for listening, everyone. I hope you have a wonderful Friday.